Wall Street analysts are grinning from ear to ear following Meta's massive layoffs in a bid to trim expenditure. Monness, Crespi, Hardt's Brian White doubts this could move the needle for Meta stock in the long term. Regardless, we are bringing you the top predictions for Meta stock this year and whether or not this might just be the best buying opportunity. Just as we said, Wall Street analysts are loving Meta stock right now, indicating that they like Mark Zuckerberg's plans for the company in 2023.
Yeah, I mean, look, the expectations were so low that ultimately it's not like these are stellar numbers. They're just better than expected, 2% better than what the street wanted for the Q1. Q1's actually ahead by 5% above the street. So revenue looks good.
Meta has been undergoing some massive layoffs. The CEO of the tech company indicated that they had started to hire more during the pandemic as more people shopped online, but the company soon began to face challenges such as increased competition from social media platforms like TikTok, as well as economic challenges and Apple privacy changes that made it tough for the advertisers to track data on potential customers. In November, Meta cut 11,000 workers, which represent about 13% of its workforce. Currently, the company is not hiring and is focused on efficiency. These plans ultimately give the impression that Meta is rallying itself for a bounce back after a rather challenging year. Meta is also exploring a sector that is set to grow to $800 million by 2025 and will further propel the company's stock forward. We'll give you the details on this next prediction shortly. Credit Suisse analyst Stephen Ju also had some thoughts on Meta's performance and outlook for the year. The analyst maintained an outperform rating for the stock because he believes technological advancements and improvement in advertising will help boost the tech company's stock. Sharing his expectation for the company this year, Ju says that Meta will have more or less ramped up products to replace lost revenue following Apple's privacy moves. Stephen Ju is bullish on Meta stock for the year 2023, but Brian White, an analyst at Monness, Crespi, Hardt, does not seem to share the same sentiment. According to White, headwinds are likely to persist, and it may take a while for Meta stock to actually bounce back. Which of these analysts' thoughts do you think best predicts Meta's outlook for the year? Tell us in the comment section below. The metaverse has been a key area of investment for Meta company. Mark Zuckerberg has described it as a digital world in which we all operate. There have been some incredible predictions concerning the metaverse this year. Some of these include the transformation of all business processes, improved functionality of digital twins, coexistence of multiple metaverses, and accelerated robotics innovations. The metaverse is yet to be fully exploited, from advertisements to in-app purchases. There are several ways to monetize the technology. With companies like Meta that have long been investors and key researchers in the metaverse, it is likely that the company to benefit greatly from the exploration and adoption by users. The metaverse cannot be talked about without discussing the ongoing AI frenzy. In a little while, we'll show you how artificial intelligence is going to be key in Meta's development this year. If there is anything to trust as far as Meta stock is concerned, it is the company's ability to bounce back after hard times. The tech company is coming up with verification charges, which it believes could boost Meta stock. Mark Zuckerberg announced a new paid subscription service called Meta Verified, which will enable users to have a verification mark on their account and be charged on a monthly basis. Analysts at Bank of America consider this a good move for the parent company of social media giants, as they insist Meta Verified could boost earnings per share by 3%. Per the analyst at BofA, Meta could see as many as 12 million paid subscribers by early 2024. Meta stock predictions for 2023 are set to greatly improve earnings. We'll bring you all the updates when this happens. Do not forget to subscribe and turn on notifications. Bank of America is definitely bullish on AI and internet companies, stating in a note to clients, use of AI will be a critical driver of all things internet, including content relevance, ad performance, e-commerce conversion, marketplace efficiency, and even customer service. Underestimating Meta's AI prospects could be a big mistake, primarily because Meta has strong AI credentials. Zuckerberg said in Meta's Q4 call that one of his goals for the company is to become a leader in generative AI. Although he did not detail how the company plans to utilize AI, he did say that almost all of the company's products will use the new technologies. The advantage Meta has is conversational data access. Nearly 3 billion people use applications of the parent company, and very few companies can match up to this. Huge sets of training data have always been important in improving artificial intelligence systems. Meta is rallying for an improved performance this year, and the same goes for other tech stocks. EV stocks are also gearing up for an incredible year. Check out our video on Tesla stock's forecasted performance in 2023. It's been great coming your way. See you next time.